One of the largest changes in history around finance and everything of value has started already. Yet, majority of the population is asleep at the wheel. Welcome back to the channel, everyone. My name is Nick. I hope that you guys have been having a great day or a great night. As we really look at what's going on around this space, significant change is on its way, and it's in the form of tokenization. Now, we've talked about Hedera, we've talked about Xrp, we've talked about Stellar, and we've talked about XDC. These are 4 projects that are already being utilized around tokenization and are already infiltrating traditional finance in some way, shape, or form. Now, as we look at some of these things of value, like tokenized treasuries sitting at $1.5 billion, or even private credit sitting at $7.9 billion, and tokenized commodities almost at $1 billion, and even stablecoins at $157 billion, what we really see here is pretty much just a drop of water in a bucket. Like, these valuations might seem like a lot, but they're really not, especially when we compare it to the market size. I mean, going back to November of 2021, this entire market had roughly a market cap of $3 trillion plus, and even that is a very small amount of money when we take a step back and just look at some of these asset classes like global real estate, which is valued at well over $300 trillion. So as we really look at tokenization, although yes, it is starting, like this has already started. I'm not trying to sit here and clickbait you guys, no, like tokenization has started. BlackRock is here, Fidelity is here, Franklin Templeton is here. Like, these big players are already here in some way, just like BlackRock down here with, for an example, the USD Institutional Digital Liquidity Fund through Ethereum, $463 million. Or even the US Government Money Fund from Franklin On-Chain with almost $345 million. Like, this is already happening. But as we look at currently the TVL within the space sitting at almost $188 billion, and it is on the rise. It's trying to break over the recent high back in March. We look at some of these categories and we really look at RWAs, real world assets. Right now, this isn't doing much. It's not like going back to October where we had like over 6 billion plus. I have about roughly 4.2 billion. One thing that is crazy to me though, is if we scroll down here and we actually look at the list of projects here, there's not, like, when we look at Hedera, when we look at XDC, when we look at even Xrp, like, a lot of the projects that are tokenizing things and have value tied to them, they're not even on this list. There is some great projects on this list, like I could see Lofty by Algorand, for an example, or even Climate DAO, which, by the way, if you haven't checked out Climate DAO, I do think everyone should be looking at this and having some exposure to it, as well as even Maple. Great projects. But outside of that, right, some of these projects are not even getting recognized, even though they have significant traction behind them, like, for example, Hedera. And I do think that this is on purpose. I think that some of these projects are being hidden. Maybe I'm wrong. Maybe I'm just, speculating or so. But it's crazy that some of these networks are not even labeled on here. Like, you could see it up here. Like, where's the XRP Ledger? Where's Hedera? Where's Stellar? Like, these are projects that are not even listed on this list up here of all of these networks. And it's just crazy to me that they're not. But with that in mind, let's actually look at a few things, because we have to go back to March. And this is where we saw a big update from Eleanor Tourette. And it started with this post. New, BlackRock's head of digital assets, Robert Michnick, addresses how the asset manager is thinking about other crypto products. For our clients, Bitcoin is overwhelmingly the #1 priority, and then a little bit of Ethereum and very little everything else. He says the crypto community would like to see a long tail of other crypto products from BlackRock, but he says that's just not where we're focused. I want you all to succeed this alt season, so I put together a full list of tools that you guys can utilize to track where the largest whales are putting their money in this space that could ultimately net you a ton of ROI. I'm also giving out 30 free crypto gems that are fully researched and even broken down into specific risk categories. Both of these guides are completely free. All you have to do is claim your access right now by utilizing one of the links down in the description below. What are you guys waiting for? Make sure that you guys have access to this, especially for this alt season that is nearing. Now over here we have new. When asked about where Bitcoin on Wall Street will be in 10 years, BlackRock's head of digital assets said, eventually we expect there will be a convergence of where the best of the old system and the new technology will become fused into a new infrastructure system in finance. And we're already starting to see this. If you guys have been watching some of my recent videos talking about BRICS and how the US dollar is changing, how finance itself is changing, how fiat currencies are changing, like our entire financial system is undergoing a significant change. And that's not me trying to sell you guys on the used car. Like I'm here to research. I'm here to find things, connect the dots, and just give you guys my opinion. I could easily be wrong, and I will accept that. But when we really look at what's going on here, I do think that this technology is going to be so much more valuable. We're looking at these things and valuing them in dollars, but you can't really, put a price on technology like this because we don't know how big it will be. We don't know how massive it could very well be once it's infiltrating the actual traditional financial system. Like traditional giants, they're already looking at these projects and, they're already utilizing them, which technically, yeah, they've already infiltrated the traditional system, but we're talking about the actual financial system here. Not just, BlackRock's tokenizing on, this network or that network, or, Aberdeen is launching their money market fund on Hedera. Like, no, we're talking about the full-on traditional financial system being disrupted by some of these projects. That's what I'm waiting for. But also, here you have Robert Mitchnick, Robert Mitchnick. He said Robbie, and it kind of threw me off. But this is from 707 Crypto, and this got posted just recently on June 7th. We have, before we would move trillions to tens of trillions of assets into this new technology paradigm, institutions would get into small exposures of crypto, understanding wallets and blockchain-based settlement. Check it out.
Before we would move trillions or tens of trillions in assets into this new technology paradigm, that actually first institutions were going to get comfortable with small exposures to crypto itself, understanding wallets and blockchain-based settlement and being comfortable with the risk controls and the infrastructure supporting that. So that's kind of what's happening. You're seeing more institutions get into crypto a little bit, and that I think is helping to pave the way one day for a broad-based transformation in tokenization.
But Robbie, maybe can you first kind of talk about like what you think about when you hear the word tokenization and what that means, and then also kind of discuss the shift in the financial system to being more open to tokenized markets and products.
Yeah, well, when we look at the digital asset space broadly, we put it into three pillars from a BlackRock perspective, which is crypto, stablecoins, and tokenization. We think all three of those are important. And when you look at what we've done, they kind of map across those three. Tokenization is the longest time horizon to real adoption of the three, for sure. And I think there's been some maybe overinflated expectations about how quickly or decisively this trend would play out. We're talking about a major transformation potentially of capital markets infrastructure that affects all types of entities across the value chain. That's not going to come easily or quickly, right? So we're starting to see some development that suggests that this is working, that there's client demand, that the utility of being able to hold a TradFi investment exposure in a digital asset wrapper is actually compelling to investors, certainly to some of our clients. But in hindsight, it was kind of always going to be the case, contrary to what some had thought, including myself originally.
There you guys have it. And again, he's just really talking about the time to mass adoption. It's going to take a little bit of time. It definitely is. But I want you to all, like, when we really address this market right now, like, this is already starting. We can see that on chain. We can see it through a lot of these partnerships, even with Hedera, for example, or like what Ripple is doing. Now, outside of this, just recently, we got the BlackRock and Citadel news, which I did make a video about, right? How they're launching this new national stock exchange to compete with the New York Stock Exchange. There is a few things that we have to wait on with this. And XRP Drops actually put out a great post because Bloomberg posted this, and it's a video clip. And we have BlackRock and Citadel are financing a new Texas stock exchange to rival NYSE and NASDAQ. They want to be an open venue that has less rules, less restrictions. They have to get approval from regulations or regulators. They have to gain momentum. Volumes must increase, which incentivizes investors and market makers to route to that exchange. If there's more liquidity, there's going to be better pricing. They are targeting corporations that might be frustrated with some of the new rules and regulations at NYSE and NASDAQ. And check this out.
Could say that this is a bit of a long shot in the Lone Star State. How hard is it to actually build and launch an entirely new exchange?
That's right, Katie. Well, they first have to get approval from regulators. So they will file with the SEC. Once that gets done, they have to actually then gain momentum. They actually have to see the trading start to happen. And whenever you have a new exchange, really what needs to happen first is that the volumes increase, and that incentivizes investors and market makers to route to that exchange. Really, if there's increased liquidity, that means that there's going to be better pricing more often. And that's why NYSE and NASDAQ, in growing their own liquidity, have been able to keep such dominance and keep their volumes so high over time.
Yeah, it's a good point, of course, that at the end of the day, it's all about liquidity. And also, too, on the timeline here, I mean, there's a lot of steps still. But it's interesting to see this because you know very well that there's a bit of an IPO drought right now. IPO volumes have been very, very muted. When it comes to the Texas Stock Exchange, I mean, what is the potential vision here for the business in terms of what they're targeting?
So it does seem like they're targeting corporations that would go to NYSE and NASDAQ, but might be frustrated with some of the new rules and regulations, the compliance that is put in place. Think about NASDAQ's board diversity program that they have put in that might limit some companies that don't meet the certain threshold that is placed for listing on NASDAQ. If they still want to go public but don't meet the threshold, they might choose the Texas Stock Exchange. That is really what this business is targeting. They want to be an open venue that has less rules, less restrictions than NYSE and NASDAQ. They're going to really promote themselves as the welcoming Texas state that is welcoming to companies that might not want to go through the hurdles that they would see in New York.
And I mean, this news is interesting in and of itself, but also interesting are some of the backers. Like we said, Citadel, BlackRock, among the investors here. What could be the bet on their part? Are they trying to hedge something here?
So this is not the first time that we've seen market makers like Citadel, Virtu back exchange operations. In 2019, the members exchange, Memex, which is still up and operating, they, along with some of the biggest banks, backed their new exchange that is, again, still in play, and they are taking market share from some of the big incumbents. And we've seen Howard Lutnick's futures exchange that is to launch later this year. That is not in equities, but in futures. But again, this is a big play for participants that might just want more venue, more choice. And there's also sometimes a financial incentive when you are a backer of the exchange. You might get actually more of the ownership in the exchange if you send more volumes to that venue.
So there you guys have it. And again, you know, I do think that this is an exchange that is going to essentially morph into a tokenized stock exchange. And I've talked about this in the past. They're setting it up for that. They're planning it strategically in an area because Texas now is growing into essentially like the new Silicon Valley. They're planning it in an area where I do think that there's going to be a lot of traction. There's going to be significant adoption. And I do think that the volumes and the values that will move over something like this, especially with BlackRock behind it, BlackRock and Citadel, we're talking about two heavy hitters. We're talking about two heavy hitters that don't lose. BlackRock definitely does not lose. And we already know from their head of digital assets, they are fully focused on tokenization. And I don't think that I need to tell you this. We've talked about this in recent videos. Now, beyond this, we also got a full update from the head of digital assets and currency transformation. This is from Deutsche Bank. We are at the infancy of tokenization. Listen.
How far do you think that tokenization is going to go? You know, what types of other, you mentioned quite a few different assets, so, you know, bonds and equities and so on, but how far do you think tokenization is set to go? Where are the limits on what sort of assets can be tokenized?
I think that's a superb question, Morrison. You know, one that I contemplate from time to time. I think The way I kind of think about it is we're very much at the infancy of that. We're the infancy in terms of the asset classes we're thinking about, but also what we can do with the power of tokenization. And I think what you'll find is the majority of use cases that people think about tend to go to places we know. So it's starting with corporate bonds. Private debt is another area that gets talked about a lot in the industry. But you've also seen projects on things like the tokenization of gold, for example, which is very interesting. Real estate is another area which is, an area which is ripe for exactly this type of technology. So I think the asset classes will evolve. Where we're seeing most of the activity today is in the place where financial institutions, in particular like ours, already understand the asset, understand how it is issued, traded, and settled. But I think the evolution will move into those more real-world assets over time, where perhaps there just isn't the trading volume and the liquidity today that we can eventually have out of tokenization. So I think that's one dimension, if you like. That's the kind of horizontal in my mind. The vertical, I think, here is what the benefits tokenization provides. And I think for now, the way people are thinking, it's really, as I said, about can I do the same thing that I do today, but can I do it cheaper and faster and more efficiently? That by itself is a great and valid reason to explore this technology. But I actually think because of the programmable nature of the assets that you end up with, there are a number of use cases that we probably cannot even contemplate today that you will be able to service and fulfill. And there are all sorts of things that people talk about. For example, people talk about automated payments, where payments can actually reach the destination, whether it's the tax man, whether it's the end user, whether it's a third party, through just one payment transaction, because everything is within that payment programmatically put in place. Another area similarly, Morris, is around asset tokenization. The discussion that often comes up is, we have, for example, with our bond issuances, we tend to space them out. There's no reason why we couldn't use to almost a continuous bond issuance cycle. And similarly, on the asset servicing leg, there's no reason why you couldn't eventually move to having coupon payments that were made hourly or by the minute, because the technology allows for that to happen. So again, these things are somewhat forward-reaching. I don't think we're there yet, but I think that's just some flavor of the type of opportunities that will exist in the future.
And, I do like the idea that he mentioned the automation aspect of this, because you got to remember AI and blockchain is converging at rapid pace right now. And that's to embrace tokenization and automation behind tokenization as well. These are the types of moves that are being made right now around these big players like Deutsche Bank or DBS Bank, Citi, JP Morgan. Like, even though some of these banks are telling you like, oh, Bitcoin is this, Bitcoin is that, crypto's this, crypto's that, they're here, they're embracing the technology, they're utilizing the technology. And the reason why they are doing this, and the reason why they're trying to, manipulate the general public, is because they don't want a very large percentage of the population getting wealthy. So they have to steer them away by utilizing these terms like, oh, crypto's used for scams, it's frauds, it's this, it's that. And, it's just to divert attention away so that they can reap the rewards of being here. And also remember that retail technically has been front running the institutional side of things for a very long time, up until recent. But now we're starting to see the floodgates opening very small, it's like a very small crack, but they are coming, they are here, and they are tapping into specific things like Hedera, XRP with Ripple, or even XLM with Stellar, XDC as well. There's a lot of great moves happening around the utility side of things with tokenization. And, as we do look at some of these platforms like DeFi Llama, it really is a shame that they're not tracking a lot of these. I mean, I don't really know how they're using the data, but I've been following the moves being made around XDC and XLM and Xrp and Hbar, and there is a lot of great moves happening. We're talking about integrations with some very large names like Axeler or Zonix or Zonix. And XLM, I mean, you have the value on chain. I mean, it's not like we're here speculating. Like, no, you can clearly see this over here. Stellar has, almost $2 million tied to it through Franklin Templeton. So, these big players are already here, and some of the big winners around the tokenization space are already showing. But the problem is is that a lot of people are not paying attention to that. They're looking at the big projects like Ondo and, you know, Centrifuge and this and that. And it's because they're the most hyped up projects. They're the ones that have the spotlight on it. And I'm fine looking like an idiot in the short term by, you know, holding some of these projects that are just not moving in value because nobody cares about them. But soon it will be impossible to ignore them because they will be very big players. They will be very big winners because they are being embraced right now by the big institutions already. So with that being said, I hope you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on for some more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.